It keeps getting worse for Carl Icahn. Shares in Icahn Enterprises plummeted as much as 25% yesterday, closing at the lowest level since 2009. The billionaire's personal fortune is also dwindling. That slump alone has cost him $979 million. It's just one more bad day in a weeks-long run of them for the legendary lone wolf of Wall Street since short seller Hindenburg Research trained its sights on him. The questions keep coming, including the big one: how is he going to get out of this? So let's ask that big question to our hedge fund reporter, Nishant Kumar. Nish, how is he going to get out of this?
Well, first of all, let's not forget that he is still very, very rich. Despite some
Yes.
16 billion blown away, his net worth is still more than 8 billion. The problem for him is that he has borrowed billions of dollars against his stock in the company, which could lead to margin calls if the stock keeps falling like this. We should not be giving investment advice to a billionaire, but one of the options he has that he can buy back the shares, he can go private. Remember, he still owns, and he owns 84% of the company, and the stock has crashed by 60%.
It's probably worth doing a little bit of hedgy history here. Bill Ackman was tweeting quite a bit. Excited by this whole event? Why, Nishan? What is it about these two?
Well, indeed, there is no dearth of friendship between the two famed activist investors. Let me remind our viewers here that Ackman famously fought with Icahn a decade ago over Herbalife and ended up losing a fortune. Now he keeps roasting Icahn on social media. He has even said that the company reminded him of Archegos, the family office of Bill Hong, which was blown away, collapsed last 2021 because of his leveraged bets.
Yeah, amusing to see that play out on Twitter. Nishan, there's a little bit of irony here, because here you have a famed activist investor who usually goes into companies and tries to change something, and we have that type of targeting investor becoming a target himself. Has that happened before? How rare is this kind of thing?
I mean, so there are not too many activist investors listed, but we have seen increasingly Third Point, Bill Ackman's own firm has a listed vehicle as well. So this is not for the first time. Again, let me remind our viewers that in 2021, one of the biggest shareholders in a London-listed fund managed by Dan Loeb, Third Point, launched a public campaign demanding changes there. And just last year, a London-listed money pool linked to activist firm Tryon said that it will return clients' capital and close after months of wrangling with their investors on how the fund is run. So it's not the first time at all.